Thank you for joining us. It's the 26th of August and I've got Trevor Brown, Managing Director and CEO of Omega Oil and Gas, to discuss the release that was put out to the ASX today about the reservoir modelling and DFIT results. Trevor, I look forward to hearing your presentation.
Thank you, Gigi. Thanks and welcome everybody. Thanks for your time. So important announcement today, just showing really the size of the prize of what we're dealing with here. And hopefully after a few months post our prior result of the well test on Canyon 1H, the market's had a chance to sort of digest what it is, and a little bit of a surprise. Markets don't like surprises. So when we announced what we thought were stellar results from our flow test, the market responded by taking a bit of price off our share price. But by way of contrast, the industry response to our announcement could not have been more stark. Industry are really excited. Other operators, people across the industry, service companies, contractors, and even international interest were congratulating us on a fantastic result. And all of them are scratching their head as to why the price went down. But that is secondary. I hope today we can clear up a little bit of what was a bit of a surprise with liquids, and we can talk about the size of the prize, which we can now delineate with some real confidence. So new data and information first. I'll talk through what we've learned recently and then how it fits into our existing knowledge base, where that brings us to, our current understanding, what the future opportunity and challenges are, and how we're going to proceed. So I'll talk for about 15, 20 minutes and then open it up to questions. So the new data is really along two lines. We've done some extensive reservoir modelling and we commissioned SLB, Schlumberger's old new name, and we've got some new information from our DFIT program. I'll talk, they're all detailed in the release, but what I really think it's worth covering is what it means, how that data is important. When we're talking about unconventional developments, and this is a new liquids and gas deep unconventional basin, which is really, there's no comparison in Australia at present. So we'll talk about how the economics work, and it's a per well basis. So recovery per well and cost per well are the really key things. And if it works on a one well basis, then it's a matter of how many wells can we have and what is the ultimate size of the prize. So the modelling was all about one well basis. And what we've done is taken the Canyon 1 wireline logs that were from the original vertical well, and then the information from the flow test from Canyon 1H. And we've created a reservoir model, which is characterising the reservoir using that information. And into that subsurface model of with those characteristics, we put a well that is optimised, and we decided on a notional 2,000 metre well, and we changed some of the fracture stimulation parameters to be optimised for the recovery that we think we get. And then we test that in that dynamic digital model and see what recovery per well we get. So as is detailed in the release, we've used a spacing of 1,000 metres, which means we have a 2 kilometre long well, and either side of it, there's a 1,000 metre block of reservoir. And so we test that, and we do the putting in the pressure characteristics that we learned from the well test, and we see what recovery per well we get. And the answer is 0.95 million barrels of oil equivalent. About 68% of that is oil, and the other 32% is gas. So that is specific to the reservoir with those parameters from the Canyon 1 vertical and Canyon 1H horizontal wells. So that's really, really impressive and incredibly exciting, because it confirms that we believe we are well over a commercial threshold for the development of these wells, using even today's cost of wells and the expected price we would get in the market for oil, and taking into account the simple economics. I'll run you through some numbers later on, just notional. But that's the first result. The second is the DFIT. And the DFIT, after the Canyon 1H well result, we went back to Canyon 2. We ran some really high technology precise logs in the cased hole, and we've performed a series of DFITs. And the DFITs give us those rock mechanical properties that are very key in understanding how we go about our fracture stimulation design. They also provide an estimate of the permeability and also, most importantly, provide a measure of the reservoir pressure. And so we're testing the vertical layers in the Canyon 1 vertical well and successively working our way from the bottom to the top. The most important and relevant one for today is when we got to the Canyon Sandstone in Canyon 1 vertical well, we tested that and the reservoir pressure came in at 0.72 psi per foot. Now, that is a very high reservoir pressure and it correlates very well with the result that we measured in the Canyon 1H toe of the horizontal well. So these wells are 15.7 kilometres apart, and we're seeing very similar reservoir properties and very similar reservoir pressures, which is a good indication that the sands are continuous and are laterally connected. And so we're dealing with a fluid and reservoir compartment that is at least 15.7 kilometres apart. That gives us an indication of the extent of the Canyon Sandstone. It also tells us that it's very highly overpressured, which is really significant. That's basically the horsepower, the power of the basin to drive the production. And it tells us that we're getting good recoveries per well from that type of reservoir. So that's what gives us confidence in the commercial development potential of this Canyon Sandstone. And then we look further afield than that. We haven't even tested fully the potential of the other zones that we've identified through this sequence. So there's a lot more to come. So how does that fit into our existing knowledge? We chose to land the Canyon 1H well in the horizontal section in the Canyon Sandstone for various reasons. But it's not by any means the only potential target that we considered. There's lots of potential in the other layers as well, but we chose that one for a variety of reasons, some of which were simply the ease and the mechanical risk, or the lowest mechanical risk of actually completing a horizontal well. And so the outcome from that showed us very clearly three really important things. It was just a breakthrough well, a play opening well, in terms of showing the trend that we're appraising on this side of the basin, that one, with the geomechanical stresses, we can drill wells into that and horizontal wells. Two, we can fracture stimulate them, that the properties are amenable to fracture stimulation and we can do it effectively without any problems. And the third thing is, will the rocks flow? And the answer was yes, they flow. And they flowed, to our somewhat surprise, they flowed volatile oil, so liquids, really a nice high API gravity liquid with associated gas. So very clearly for us, we were really excited. Three big proof of concepts. We can apply the technology that will ultimately be needed to drive the commercial development of this basin. So now we add in the extra information that we've gained. We went back to the Canyon 2 well and we did the DFITs and we did the pressure measurements, and we have now got a really clear understanding of the beginning of this broad extent of this particular sand, and by implication, the other sands are also increasing in our interest. So where does that leave us? What's the next challenge? Having proved the concept and now starting to show the delineation of the play and that it extends broadly, it's really about how big is this prize? What is the size of the prize? And how can we delineate it further? And just notionally, the line that we've put into that release says that if this lateral extent of the Canyon Sandstone continues, then we've got something really exciting on our hands. And I will show you on the screen a couple of interesting slides. So this one is just a recap of what we've actually done. The Canyon Sandstone Reservoir, 10-year estimated ultimate recovery of 0.95 million, or in gas equivalent 5.72 BCF per well. And that's from a single 2,000 metre horizontal well at 1,000 metre well spacing. Now that 2,000 metres is a notional distance that's under our current estimation is entirely achievable, and we're not ruling out any further upside of drilling those further into the reservoirs at even up to 3,000 metres, which is currently being achieved in the US. And that will be something we address in our late stage appraisal activities. And if you assume that the reservoir is extending across our acreage, we can fit up to 418 of those style development wells into our acreage. And that gives us an understanding of the broad size of the prize. As I said, large upside with both the reservoir properties being improving elsewhere in the reservoir and multiple reservoir levels. The high overpressure is really significant, and that compares extremely well to any of the really liquids-rich unconventional plays that are occurring in the US. At these levels of 0.72, 0.79, that's a lot of drive in the reservoir that gives us those production rates and estimated ultimate recovery. And we're seeing that lateral extent confirmed by the mapping and the formation pressure measurements. The seismic is very easy to interpret in this area. It's very, very straight correlations between all the wells. So let me now go to the map. Now, what's the next challenge? Here's the Canyon 1 well that we did and drilled the horizontal. Here's the Canyon 2 well, 15.7 kilometres apart. These logs on the left both show the penetration of the Canyon Sandstone, and they show you the reservoir porosity and hydrocarbon indicators on the right-hand side here. And this is the Canyon 2 wireline logs that we took, and these are high-quality wireline logs that were taken in the cased hole, Canyon 2. The Canyon 1 logs, unfortunately, were taken in open hole, and the hole conditions were not great. And there was what we call stick slip issues, which means that the wireline tool that was measuring the properties was jerking as it came up the hole, so the measurements were not fantastic. 7.3 metres of net pay was calculated in this well. When we did the high quality logs in Canyon 2, we're indicating 23.4 metres of net pay in this section. So if you were to try to reconcile those and you say, well, this one's higher than this, I would say that the problems that we had with the well log quality in this hole indicates that there's probably more in this than we are currently estimating. However, our model was based on that 7.3 metres. And if you look at it regionally, indicating where the improvements in reservoir thickness and reservoir quality where they may go, is that we're up dip here about a bit over 150 metres. We're going up here towards Canyon 2, and we're getting a better thickness and some better pay zones there. Now, if that extends further, then this area becomes incredibly interesting. So the question is now the extent of the play across the reservoir. How widely spread could this sand be? Well, let's look at some of the other logs that we have, and there's only a few penetrations of this in the deep basin. The well to the north is Tasmania, and you can see that there is also good indications of the same sort of characteristics, and Fantome further up, which is a well drilled in 2010 or 11, I think it was, all the way up here. So now either all of these four wells got incredibly lucky, or this sand reservoir is spread across a wide reservoir area. So I tend to be a bit of a skeptic, and I know how these wells were located in the first place, and they were not based on seismic. They were based on the fact that they happened to be on a seismic line, which happened to be acquired along a road, and we drilled the wells close to where the ease of locations was. So what I'm saying is that it looks very likely that this reservoir is widespread across this entire trend. So that's pretty exciting, and that leads us to how we're going to proceed. Well, the next thing is the challenge is to understand how widespread and to actually provide evidence for it. So our plan will be to be drilling some more wells into this that are illustrating the size of the play. And that's what we're currently preparing, and we'll be announcing as soon as we have some certainty around exactly what that program is. So really, these are great results. They really point to a big upside in this basin. We've got a mix of oil and gas in this particular reservoir that is about 2/3, 1/3. We expect that there'll be other reservoirs that are much more gas bearing with liquid condensate across the region. But we have moved now from proof of concept to really defining the size of the prize and getting after it in a serious way to appraise it further. We're in what I call early appraisal phase of really delineating and proving the size of the prize. As we move into late appraisal stage, we'll be doing a lot more studies on engineering and optimization of the final development programs. And then with a play like this, we will move into a pilot phase where we apply that information into some schemes that give us early development and start producing oil and gas and start getting the required infrastructure in place. So this is a very exciting prize. It looks like a really significant outcome. It's got all of the hallmarks of a large region that will be a commercial producing region for oil and gas in the future. It could not be better located. It's in an area that's close to existing infrastructure. It's in an area where there is a huge market that is ready and really, really requiring some new volumes of both oil and gas. The government in Queensland are incredibly supportive and encouraging us to get after this with as quickly as we can. The location, as I mentioned, is excellent, not only in terms of its proximity to infrastructure, but this is an existing oil and gas producing province. It's got all the services, the local government, the landholders, all the local cultural heritage issues, environment issues are all relatively straightforward and easy to accommodate, encouraging areas, encouraging people in the area. So this is really well positioned to accelerate and to take the next steps in a development. So I think, as I said earlier, I'll give you a little guide here. If you do the maths, and it's not hard to do, per well recoveries on the initial information that we have is looking like about 0.95. Let's round that up to 1 million barrels per well. Then if you take that as, say, 30% of gas and 70% of oil, you're talking about 300 million barrels from this one reservoir layer. And then the per well economics are pretty straightforward. We're talking about a recovery of, say, 0.7 million barrels a well at around $70 a barrel. That gives you a good net back of around, say, 40, after deducting the costs for royalties, transport, processing, etc. That would give you about $45 a barrel. And that would equate to revenue per well over the 10 years that's been modelled of something in the order of, say, $35 million. And if you use your own discount rate to get that back to an NPV, you're talking somewhere in the region of $20 million per well. So that is a very good revenue or a very good NPV per well. And I'm talking US dollars here, by the way. Assuming well costs are somewhere in the region of, say, 10 to 15 million US at current levels, and that's not taking into account that it can be improved significantly in the future and will be, but that makes it look really, really economic. And so that gives you a bit of a sense of the size of the prize if you multiply that out by the number of wells that I outlined earlier. We're talking about a very big prize. So basically those back of the envelope economics, and do your own by all means, but they encourage us that this is a serious prize and we're going to get after it in a really serious way. So I think with that, Gigi, I will open it up to questions.
Excellent. Thank you, Trevor. Okay, so first question for you. Can you expand on the 7.3 metre net pay from Canyon 1 versus the 23.4 metre net from Canyon 2? Did anything happen in Canyon 1 drilling which would have impaired this? And is it likely that Canyon 1 net pay is more like Canyon 2? There's a couple of ended questions there, so let me
That's
know
fine.
if we can start again.
I think I covered that during the talk. The problem with Canyon 1 was that the open hole conditions were not great. The wireline log operation suffered from this jerkiness as the tool was coming up the hole, so what we call stick slip. And we did the best we can to massage that and get the best outcome we could. The Canyon 2 results were done in cased hole with really expensive tools that we would not have put into the open hole for risk of losing them. So the Canyon 2 logs were better quality than Canyon 1. There will be geologic differences, but I think there's also log quality differences, and those two will come together, and I would hazard a guess that it's closer to the Canyon 2 results, not the Canyon 1 results. So I think there's a bit of upside there.
Excellent. And I've got a question here that I think you covered to a degree, but Elixir has talked about the Montney as being a good BCG play analog. What do you think the best analog for Omega is?
Yeah, we've got the liquids, and the analogues are in various different aspects of the play, and we've got to put the whole lot together. So whether you're talking about the style of the reservoir, the depth, the pressure, or the fluids, there's different analogues that are relevant. The Montney for a basin-centered gas play is perfectly valid. That's where the basin-centered gas story started and was first characterised. We think the liquids plays that we're most similar with are more likely to be the Permian or the Eagle Ford in Texas, and they're probably the key ones. But even then, there are others that have characteristics on certain aspects of the play. Our overpressure here ranks as good or better than the best of those. So, and as I said, when you're starting with the most important characteristics, that is the basic engine. It's the horsepower that drives the production rates out of the basin. So we compare very favourably, better than nearly all of the others in the US. So this play will have its own set of characteristics, but they're where I would put the best analogues at the moment.
And this is from a current shareholder who says, as a former shareholder of the Queensland gas days, these results are really good to exceptional. Also, the latest shoot-off with Arrow Energy. Both companies, as you know, went on to be stellar performers. Do you see these discoveries as results as similar or better?
Yeah, look, I share the sentiment. I am very excited about this, and I've been around quite a while. I see in Australia that this ranks right up with some of the more significant developments that have ever happened in this country. I'm talking Bass Strait, Northwest Shelf, the understanding of the coal seam gas, Bowen Basin plays and Surat Basin plays. It's that sort of significance that I attribute to this. And I think the market really, really need this at the moment. Big volumes through export channels and big volumes into the domestic market of gas. And the oil story is yet to be fully understood. I think with energy security, national security, and economic security, this is really where I put it. It's right up there in the next big wave of developments that it's the best thing that's happened in decades.
Excellent. All right. I've got quite a few questions coming through, so I'll get to them. Why did SLB choose to use the data from Canyon 1 instead of Canyon 2 for their estimates, particularly if the results from Canyon 1 were somewhat questionable given the jerkiness of the test?
That's an easy one. That's because that's where we had the Canyon 1H well drilled and tested. So we combined the reservoir properties that we measured in Canyon 1 through the petrophysics, through the logs, and then we measured the fluid or the reservoir properties from the pressure analysis that was the data that was obtained during the flow test in Canyon 1. So that's where we had the richest data set, where we could combine the static properties with the dynamic properties. And so now we take that as one data point, and we don't know yet where that stands on the distribution of properties across the entire reservoir, but that's what we aim to find out. My suspicion is it's probably on the lower end, but that will stand. We'll test that over the next year or two.
Excellent. We've got a couple of questions here that I'll sort of amalgamate for you, but asking to what extent do you liaise or cooperate with other players like Shell and Elixir in the area? And do you think you'll need partners to move ahead with the project?
Yeah, also good questions. So yes, we are very collaborative with the other players in the basin. That will evolve over time, and the government in Queensland will also be paying close attention to this, given the significance that I attributed to it earlier. Whatever happens in this basin, and I know that there are varying results across the basin, some more gas rich with liquids, condensate liquids, some more liquids rich with associated gas, but in either case, to develop gas or liquids, we will need to produce both, and we need to have facilities that manage both, so the infrastructure that's required. And so I expect that the players will increasingly talk, probably facilitated by the government, to put in place the necessary infrastructure to get these volumes into the market, which are desperately needed.
Is there a reason OMA hasn't shared a type curve used for the analysis?
Yeah, really too early, too much uncertainty around a type curve. What we've done is constrained our reservoir model right now to a 10-year EUR, which is a very short time frame. A lot of the EURs are done over a 20 or 30-year period. So a type curve really just gives the profile of how that EUR is produced over time. And the bulk of it will be early when the wells flow strongly, and a minor part will be the latter years. So at this stage, we have one data point, and it's really too early to put out a definitive type curve. It would be somewhat misleading, I think, just due to its statistical lack of data points and sample points. But over time, we get more confidence, we get more and more data points, we'll put a type curve out. But really, to define the size of the prize right now, the EUR is the most relevant measure that we can use.
Does this modelling add or detract from the 1.73 TCF 2C contingent resource that you presented at the Noosa Mining Conference last year?
Yeah, this will be the subject. I don't want to preempt what a reserve assessor would put in place. That was on the assumption that this would be dominantly gas bearing with some associated liquids, and we'll have to get a little more data to see how that goes. But I think on these current numbers, this is going to be a positive above and beyond what was initially assessed. I think we're a lot more excited about the potential now than we were back when those results were put forward.
Excellent. And from what is known about Shell's drilling campaign on the other side of the trough, do your results appear to be similar or show similar characteristics?
Shell haven't published anything, and I can't comment on that.
Okay. What does the roadmap look like to update the 2C or 2P resource?
Yeah, we need to define with a couple more wells the spatial distribution, both laterally and vertically, of the various elements of pay, and then we'll have that assessed after we've got a couple more penetrations that are strategically placed. So I would suggest that will be another 12 months or so, potentially shorter than that.
This probably feeds into that. Will future drilling you talked about be vertical to confirm the lateral extent? Is this lower cost, or will you drill another lateral in the forthcoming drill program?
The answer is yes, both. So we will, I think I've just laid out, we're in the planning stages of that. Ultimately, it will require both those elements. Exactly how we put that together, I would say in the early stages, probably more oriented towards some vertical, but quickly followed up by horizontal. I described earlier the early versus late stage appraisal. Earlier is about defining the spatial distribution across our acreage and up and down through the sequence. And then from that, we will help to define where the areas of most appeal are, and we'll put in place some horizontal wells that show the commercial, that prove the commercial producibility of those, and start optimizing some of the design parameters of those horizontals. So I think in the early appraisal stage, more oriented to verticals, in the later, more oriented to horizontal. But we intend to define that carefully and announce that when we're ready pretty soon.
And what is the estimated time to commencing the pilot production stage?
Dependent on the results of the next drilling phase. You know, it really depends what we find, where we anticipate the areas are that are the most amenable for those pilot phases. So I don't know the answer to that just yet.
And can you please talk about the infrastructure required to commercialize this resource? What already exists versus what needs to be built or shared with maybe with other partners in the area?
Yeah, that is a good question. I described that we're going to need ultimately infrastructure for gas and liquids, and there's going to be a lot of each coming out of this basin, I estimate. So we need to define rough scale, rough proportion, and put in place optimised development of infrastructure across the region. So it's very early days to be able to discuss that, but we need both, and we'll be in discussions with the government and other operators, and we'll see where we get to with that as the appraisal of the various areas continues.
What depositional environment do you think the Canyon Sandstone is in, and are you planning on taking any cores?
I'm not going to give away our subsurface evaluation of this play and the architecture. Suffice it to say that I've already showed the logs on this screen in front of you that show that this is quite widespread across the area. And yes, coring will be part of our future program.
Okay, I've got a couple more that have come through via email. Is the reservoir model a static or dynamic version?
It's dynamic. Yeah, so it incorporates the static properties measured from the petrophysics, and it incorporates the dynamic properties measured from the well test on Canyon 1H.
And when will OMA acquire 3D seismic to assist in further constrain the size of the reservoir?
3D seismic is a question for further down the road. I think it's likely that if we define a really attractive area or a sweet spot, then potentially we would acquire 3D seismic over that. But that's a question that remains, and there's not a definitive answer to that at the moment. It's not our next stage of appraisal.
Is there likely to be pressure communication / connected between Canyon 1 and Canyon 2? Is there any risk of compartmentalization in the field?
Yes, we expect that there'll be compartments, but minor in terms of when you look at the gross scale of the reservoir. We're seeing very similar levels of overpressure in Canyon 1 and Canyon 2. There'll be subtle differences, but not major compartments that actually segregate the ability for the reservoirs to communicate over production time.
And what would be the approximate cost per well that SLB used in their analysis?
SLB didn't do economics. They just built a reservoir model.
And is the Canyon discovery now classed as a tight conventional stratigraphic oil play?
No, this is definitely unconventional. The difference between conventional and unconventional is simple. Conventional wells don't need any special stimulation to be able to flow at commercial rates, whereas unconventional wells require special stimulation, and we're doing that with hydraulic fracturing. So this is definitely unconventional, and you describe this as a deep unconventional oil play, and it's got stratigraphic elements to it. Yes, it's a bit semantic how you define it. That's what it is.
And what do you think the near-term pathway for capital would be? Would asset level farm down be an option?
Definitely. We have all sorts of options in front of us. We've got 100% equity levels. There are no royalties over this. We've got strategic flexibility for funding. We can introduce partners at an asset level, at a corporate level. As we understand the extent of this and where the attractive areas are, we can divide it up into different projects if we see fit. So we've got all sorts of options available to us, and we are entertaining quite a lot of inquiries and some approaches from partners. potential.
Fantastic. Well, thank you, Trevor. That was a great presentation, and it really highlights the enormous potential of what you have here, as well as the Taroom Trough itself. So thank you. Is there anything else you wanted to say?
No, great pleasure. It's an exciting time, and this is really, I think the understanding is really growing now around both the size of the prize and the significance of this. And it falls at a time when these resources are desperately needed in the market. And so I'm really excited at how much good this can do for Australia. And I think Queensland are really encouraging this, and we can see a really clear pathway now. And it's sometimes things just fall into place really nicely, and this one is in the right spot at the right time. It's got the right characteristics. It's got very low CO2, less than 1%. It's near infrastructure, so really, I see a really national requirement to get this underway as quickly as possible, and that's what we're endeavouring to do.
Thank you so much for the presentation today.
Pleasure. Thanks everybody for your time.